Hello and welcome. You're watching Ask Profit here on NDTV Profit. I'm Hersh. Sayta, with me is Anushi, Vakharia, and over the next hour or so, we'll take all of your queries and have all of them answered, as many as possible rather, answered by our guests. Number flashing at the bottom of your screen. Do WhatsApp us. Do share details. Your holding period, your holding expectations in terms of time, your returns already made or return expectations. Do share some of those details with us to help us get you better perspective. But quickly on to where markets are at currently. We're seeing the Nifty 50 up around 0.7 odd percent, and we're holding up fairly steadily at that 0.7 odd percent mark. We're just below the 25,000 mark on the Nifty, and we're holding fairly steady, at least for the day. It's a good, at least, start to the week that we're seeing. And let's pull up the advanced decline. Let's see where the broader markets are also at. Advanced decline in favor of the advances. We have 1,200 odd advances to around 900 odd declines. So a fairly steady kind of market that we're seeing in trade, at least to start this week off. Let's quickly pull up which are the counters which are aiding the Nifty 50, at least in trade today, because definitely the benchmark is looking far stronger, far more resilient than the mid and the small cap, the broader end of the market. And there you go. Why is that so? Very clearly, the four largest of the large caps, HDFC, Reliance, Infy, TCS, holding fort and doing quite well in trade today. Even when you're looking at the loser side of things, very, very far and few in terms of the number of losers, very, very few. And therefore, that's possibly the other piece that's aiding the Nifty higher today. Let's pull up the mid and the small cap indices, see where they're going. And essentially, we're seeing good traction, but they're, of course, underperforming the benchmark, both the mid and the small cap. For context, last week, the Nifty small cap, mid cap was up over 1% in trade. So that outperformed the benchmark by just a wee bit. But the small cap was up almost 2.5%. And that, therefore, on that higher base, the small cap seems to be holding up fairly well in trade. So the broader markets continue to do well, but slight underperformance when you're comparing that to the Nifty 50, at least in trade today. Let's pull up the sectors. The sectors in focus, Nifty IT for sure. That one stands out, 1.4% higher. Among the losers, the PSU Bank has slipped into the red now, down around 0.25% or thereabouts. The Nifty Bank, though, holding up very well, 0.6% higher. The PSU index also holding up very well. So the irony of it is the PSU banking index is the top loser, but the PSU index as well as the Nifty Bank doing fairly well in trade today. But let's quickly take it to specific stocks. And the first stock in focus today is Zydus Life. We have with us Varsha, who's joining us with regard to what's happening on that count. Plenty happening, rather. Varsha, talk to us.
Well, thanks for that. So let's divide this into three segments. First, what is the deal? So they are acquiring 50% stake in Sterling Biotech from Perfect Day. Now, this acquisition will lead to Sterling Biotech becoming a 50-50 joint venture between Zydus Life Sciences and Perfect Day, with equal representation on the board. The newly formed JV aims to establish a manufacturing facility dedicated to producing fermented animal-free products for global markets. And the cost of acquisition that Zydus is doing is at around 550 crores. Now, given the new objective of the entity to produce animal-free protein products, the company states that a strategic view of the existing business will be undertaken. This means that they may divest a part of the existing business. Now, note that Sterling Biotech's current business includes gelatins and APIs, and their FY24 revenue stands at around 450 crore. And from FY21 to FY24, they have grown at a CAGR of around 10%. Nomura has rated neutral rating for this with target price of around 1,000, stating the same reasons as I said. Now, the other trigger that is leading to this pressure in the stock prices, their new competition impact. So Teva has launched a generic version of a product which is used to treat a certain bowel disease, and Zydus over the last years have enjoyed the benefit, a practical exclusive in absence of any competition, and the product seems to have contributed around 140 to 160 million US dollars of sales in FY24. With the launch of this, Teva's as generic, a city believes that the sales of the product may fall 40 to 50% from the current level. And as the competition in the product has been delayed by more than 4 years, the street seems to be unaware of the concentration risk and their impact may be seen in the valuation. So these are the two reasons we are seeing pressure on the stock.
All right, thanks for that, Varsha. Well, that was the roundup on why Zydus Life Sciences is in pressure today. But with that, we'll take it across to our guest for today, Vineet Bolinchkar, Head of Research from Ventura Securities, and Rajesh Palvia, Senior Vice President, Technical and Derivatives Research from Axis Securities, join in. Hello and welcome to Ask Profit. Vineet, let me take it to you. The street is not excited about the new acquisition that Zydus Life Sciences has made. What are your views on it? How is it looking fundamentally?
I think, we would like to delve more deeper into the strategy of the company before commenting on the JV, the acquisition.
Vineet, fair point, but just with regard to where we are currently and all the limited information we have and just where valuations are at, where Zydus Life is concerned, is there a view that you may have?
No, I think the Zydus valuations is fairly priced. And we would like to see more commentary come in, as I said, before making any kind of statement on this acquisition.
All right, Rajesh, I'll come to you on this one. How is Zydus Life Sciences looking to you on charts?
So after today's gap down, stock now slipped below to its 20-day, 50-day moving average, and stock has broken down its upsloping trend line on the downside. So looking at the near-term, short-term structure, we believe that some more weakness we could see in the stock prices. Possible downside we may see towards 1070 to 1050. That's the lower side, the level where we can see Zydus Life Sciences to slip further. So until the stock not crosses above 1180 kind of zone, I think we may see further more supply to there in the stock prices. So I think one should wait for this supply pressure to settle down. Maybe around 1050, 1060. Again, we can review this stock.
Okay, it looks like both our analysts on board with a wait and watch on this one. But let's quickly start taking viewer queries. Do share your queries on the number flashing at the bottom of your screen. Give us details so that our guests can help you answer your specific query better. But first off, we have Anvesh from Andhra Pradesh. He holds 10 shares in Bajaj Finance at 6,606 rupees a share. Vineet, I'll come to you on this one because his expectation is to get him some views with regard to whether he should add more to his holding, whether he should sell or hold.
So this is with regards to Bajaj Finance, right?
Yes, please.
Yeah, I think, if you take two things into consideration, rates are expected to decline globally. And two is consumption booming in India thanks to the fiscal profligacy of all the states. I think with, just one segment of the consumer market booming, like, where we are expecting air conditioners to grow at 40%, I don't think that the price of Bajaj Finance can be held down any longer. To this, you add one more fact that, Bajaj Housing will get listed separately. All focus in Bajaj Finance will be on consumerism. And with the FMCG and consumer durables boom in this country, I'm definitely expecting Bajaj Finance to have kind of bottomed out for the long term. One more trigger that we are waiting for is that in the September quarter, we hear that the credit costs are, well in control. Once you have all this, then we have a recipe for a stock which could possibly double in the next 2.5 to 3 years.
Okay, so that was the view on Bajaj Finance. But Vineet, I'll stay with you for the next query. Now, Mohit from Ludhiana wants to understand more on NMDC. He's got about 500 shares of NMDC at a price of about 136. Also received 500 additional stocks of NMDC against the demerger which took place. So he wants to understand from a 2-year perspective, what is the view on NMDC? He's currently at a 43,000 of profit. So that's quite a big profit number that he's already sitting on.
No, I think that he should continue to hold his stock since he's got some handsome profits. And we believe that NMDC and NMDC Steel both are poised to do well going ahead, primarily due to the fact that India's infrastructure boom is really playing out and shaping nicely. So we expect things to do well, and we believe that the steel prices have kind of bottomed out. So we will see some better pricing come in for these stocks also.
Hey, Rajesh, let me switch over to you. We have Koma from Shillong. She's purchased 500 shares of Tejas Networks at 1272 rupees a piece, sitting on a decentish kind of profit. But your views with regard to what she should do with regard to Tejas Networks?
So overall, long-term structure is bullish. Some profit taking has been there in stock from the higher level, but still, if you analyze on the medium-term to long-term perspective, I think she may hold down the position as stock is taken the support from 1200 kind of zone on the lower side. Until the stock is holding about 1200, we feel that there could be another round of buying we may see in the stock and possible upside. Towards 1380 to 1440 we can see in the short period of time, but on the longer term chart I think the targets are much higher, and we believe that on the long term perspective 1600 to 1700 could be the target. So I think with the stop loss of 1200 she can hold on the position.
Okay, a hold on Tejas Networks and overall a positive stance that we are looking at from here. But we'll move on to the next query, and this is from Praveen from Hyderabad. He's holding Protein EGOV shares, and this is at a price of 1187. He holds about 130 shares and currently sitting at a 1100 of a profit. Rajesh, let me come to you on this one. Do you have the stock under coverage? What's your view on Protein EGOV over here?
So, we are not tracking this stock actively, but yes, I'm just opening the chart and looking at the structure. We believe that still stock is showing strength on a short to medium term perspective. The way stock is holding above 1950, 1980 kind of zone, I think trend may remain on the bullish side. Once stock crosses about 2100 kind of zone, then possible rally may extend to 2250, even 2300 kind of zone. So I think for trading, I think it's not a trading stock. I think if you can hold on for some investment perspective, yes, they can hold the position. At this juncture, I'll advise to keep stop loss of 1940 to hold the position. 2250 to 2300 would be the next target on the higher side.
All right. So those are some levels for you. Let me come to you, Vineet. We have a viewer who holds 55 shares of Ireda at 279 rupees a piece. Now, your quick take with regard to this one, because we've seen a significant run up in the stock price. What's the sense now at this point?
So I think financials will continue to do well. However, we believe Ireda is overpriced, and I would recommend replacing Ireda with PFC or REC. We think both of them are substantially underpriced to Ireda. They all have similar business models, and we expect PFC and REC to outperform Ireda.
Okay, so that was the view on REC. But now moving on to the next one is for Shyam Metallics. Now, here he has bought 45 shares at a price of about 500. Whether he should hold, sell or add, Rajesh, I'll come to you on this one. What's your view on Shyam Metallics? How is it looking on the charts?
A very strong momentum is going on in this stock. Stock is almost trading near to its all-time high trajectory. The way stock has moved up in last couple of weeks, we believe that furthermore follow-up buying action could be there in the stock prices, and possible target towards 900 to 940 we can see. So I think trailing of stop loss would be the right strategy at this juncture, as he has bought at very lower level. So at this juncture, I'll advise to keep stop loss of around 780 to hold the position. Possible target towards 900 to 940 we can see in the next couple of weeks.
Okay, Rajesh, I'll stick with you. We have Pushpa who wants to know whether Indegene, what should she do? She owns around 33 odd shares at 452 a piece. Should she continue to hold, add or sell?
So this is a recent listing stock, so I don't have much data for the stock, but the limited data which I have at this juncture, that is showing a very range bound behavior for the stock. Stock is moving in range only. On the higher side, the technical structure is suggesting that 630, 640 is the higher band for this consolidation range. If that happens, then possible target we may see towards 750 to 800 also. On the downside, 500 is the major support area for this stock. And just in a disclosure, this stock I am holding in my personal portfolio also. So I would suggest to take some other financial expert to advise also.
All right, fair call on this one. We'll move on to the next query then, which is from Velor from Tamil Nadu. He wants to understand a 2-year outlook on Tata Steel. He's bought about 685 shares and this is at a price of about 180.85. Vineet, I'll come to you on this one. What's your view on Tata Steel?
Tata Steel will inch up gradually. I would go with a Shyam Metallics or a SAIL much better than a Tata Steel.
Okay, so that was on Tata Steel. But the next one on the list is about Hutco. Vinod from Chennai wants to understand whether he should buy Hutco or Zomato for a 2-year time horizon. Can he buy it at current levels or need to wait for further corrections? Rajesh, I'll come to you on this one. Hutco or a Zomato, which one do you prefer?
So for short-term trading perspective, Zomato would be my preferred choice as the stock is almost trading near to its all-time high trajectory. The way stock has managed to give breakout and holding the ground at high levels, so Zomato would be the stock for trading perspective of short-term basis. Possible target on a short-term we can see towards 285 to 290 in the stock, and on the downside he may keep his stop loss around 250. Hutco is in correction mode. Though stock is corrected from its previous swing high, the way stock has corrected, I think on the downside, 255 to 50 is the important support area for this corrective move, though stock has slipped below to 50-day moving average. So maybe in near term, we may see some pressure. So I think one should wait for further more correction. 250, 255 is the right level again, to re-enter in this stock.
Okay, Vineet, if I can come to you on this, Hutco versus Zomato, quite divergent just in terms of sectors plus in terms of the way the business functions. But from a 2-year perspective, any views you may have?
So, Zomato, although it's a popular stock, I also believe in the fundamentals of the company. But, I'm more comfortable buying it at lower levels because we think that FY27, we had a, target of 260 already achieved, and there could be little bit of upside, but I think Hutco offers you far more options, especially considering the fact that interest rates are now going to decline. I think the financials will now come back into the fore.
Okay, so that was the view on Hutco versus Zomato. But moving on to PFC now, here the next query is from Bikesh. He wants to understand 6 to 12 months view on PFC. He currently has about 200 shares and this is at a price of about 530. He's currently sitting at a loss of 3,000, about a 3,000. Rajesh, I'll come to you on this one. 6 to 12 months, what's your outlook on PFC? What is the kind of stop loss levels that he should be looking at?
Outlook is on the bullish side. The way stock has moved up in last couple of months, and stock after this correction also, stock is holding about 220 to 50-day moving average. Long-term breakout is already intact for the stock. So we believe that, yes, in the next 6 months to 12 months, yes, there would be another round of buying interest and then stock may exhibit furthermore, higher level from the current prices. Possible target we may see towards 600 to 620 kind of zone. So I think at this juncture, you should keep a stop loss of around 485 to hold the position in PFC. Maybe we may see a good up move in next couple of months towards 600 to 630.
Okay, Vineet, let me switch over to you. We have a viewer, Senthil, who has 3,500 landmark shares at a price of rupees 600 a piece. Slight loss, if at all, and just wanting to know your views on landmark cars from medium-term perspective.
So, landmark car has been quite a lethargic mover, and despite having the, all the things working for it in terms of sales of international vehicles, foreign-made cars, good service income, growth, everything kicking in for it, the stock has significantly underperformed. And given the fact that, it's not doing so well, I think we would ask him to switch and buy into some of our favorite counters, like I have spoken to you about Paytm or maybe Bajaj Finance, or even into Marksans Pharma, which are doing really well.
Okay, Vineet, we'll stay with you. We'll shift focus to the IT sector now. KV Narayan Rao from Visakhapatnam, he holds shares of Persistent System, and this is at a price of about 4,423. Wants to understand the long-term view on this one, whether he should continue to hold it at these levels that we are looking at. What is your view on Persistent?
I missed the stock. Which stock is it?
Persistent
Computers.
Systems,
Okay.
yeah.
I think it's one of the best IT stocks to have in your portfolio. Hold on to it, and we believe that you'll definitely be rewarded handsomely. My only take is that IT sector as a whole is for me a trading bet, because I'm very skeptical of the US markets, so my view on Persistent Computers is qualified by the fact that we are underweight on tech, IT stocks.
Okay, Rajesh, let me switch over to you. We have Sibi from Chennai wanting a view on Spandana Spurti. 150 shares is what is held at 670 rupees a piece. Your sense with regard to where this one will go, especially in the short to medium term?
So stock has corrected all the way from the level of 1200. Now it's trading at 600 level. The stock is making series of lower top, lower bottom formation. Stock is slipped below to all its important moving averages. So looking at the short to medium term as well as the near term structure, it looks on the bearish side, and we may see furthermore weakness. At this juncture, 600 is the critical level. Some reversal was there from those level, but still the indicators are still indicating that maybe we may see further more weakness in the stock if it breaks below to 600 zone, and then if it's happened, then possible down move can extend to 550 kind of zone also. So my advice would be if any pullback comes near to the prices, as he has bought around 630 640 zone, so I think if you get any chance to exit around those level, try to exit it and switch into some other stocks.
Okay, so that was the view on Spandana Spurti, but I'll come back to you, Vineet, on the next one, which is from Prakash from Chennai. He wants to understand the view on Galaxy Surfactants. He's bought it at 70 shares at a price of about 2,800. He's holding it for 2 years and has not seen any significant movement in terms of stock price. Should he continue to hold on to this? What is your view on Galaxy Surfactants?
So it's a great stock, just facing a kind of a depressed sentiment because of the bearishness in the specialty chemical space. With the with the FMCG sector expected to pick up, I also expect this stock to do materially well, so he can continue to hold on to this.
All right, let me switch over to Rajesh. Rajesh, we have Sudhakar from Bangalore holding 1,100 shares of IEX at 174 rupees a piece. And he's holding it since 2022. Wants to know whether he should continue to hold or sell. What are technicals and what are charts indicating?
So in the last couple of months, the stock has recovered significantly from its recent low, and the way stock is now trading about to 50-day moving average, stock is still managed to hold its previous breakout. So our advice would be to hold the position, as stock is showing strength on the near term as well as on the short term charts. So maybe once stock crosses over 195, 196 zone on a weekly closing basis, then we may see furthermore upside to 220 to 230 kind of zone also. So 176 would be the stop loss to keep to hold the position in IEX. Possible target on a breakout above 196 may be there around 220 to 230 kind of zone.
Okay, so 176 is the stop loss level that you should be watching out for. But for the next query, this is Anil Jain from Bhopal. He holds about 100 shares of Adani Wilmar at a price of 450 and wants to understand the future outlook on this one, whether he should make exit on this one or continue to hold. He's currently at a loss position over here. Vineet, I'll come to you on this one. Do you have Adani Wilmar in your coverage?
Yes, we do have Adani Wilmar in our coverage. We believe that the stock is now poised to move up. Couple of reasons for that is that the the chemical sector as well as the commodity price trends are favorable to the company. With Adani having announced their intention that they want to exit from the company, makes Wilmar the sole owner of this company. And we believe they've got the entire consumption theme well figured out, especially in the food staple space. So while the stock is expensive, we expect operating leverage and volume growth to play out, and hence our positive view on the stock.
Well, positive view. Just want to quickly caveat, NDTV group is part of Adani Media Group, which is also part of the larger Adani group. So please bear that in mind. But quickly switching focus, we have Ola Electric, 2,900 shares purchased. We have M. Nirmala from Hyderabad at 146.3 rupees a piece. Stock has fallen below the, or rather in around just below the 120 rupee mark now. Vineet, let me come to you just from a perspective that, technicals we may have very limited view, but Vineet, from a fundamental perspective, what should the viewer do?
On which stock are we speaking?
Ola Electric, 2,900 shares purchased at 146.
I think the timing of the stock was very bad. You bought it at almost 2-year target highs. We expect the stock to consolidate around levels of 105 to 108, which is our buy levels. So if you can manage to hold on to your losses, you can look to average the stock around the levels that I have mentioned.
Okay, so look to average losses, but completely out of time on this one. Thank you, gentlemen, for joining us, both Vineet as well as Rajesh. Thank you so much. It's been a pleasure taking all these viewer queries and answering them. And of course, we'll see you tomorrow, same time, continue to answer queries, but completely out of time on this edition of Ask Profit. From myself, Chinmay and Mahima, everyone who puts the show together, thanks so much for watching.
Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take a look at all the stocks which have been the flavor of the season. But before that, I'm going to take a look at the Nifty 50 specifically, which is currently at the mark of 25,000 precisely. Actually, wouldn't cut it because we're about 8 points higher than that. But the Nifty Bank as well is showing a lot of strength. And do remember that it is largely on account of banks that we could potentially have seen this advance come through. And let's clear all those doubts by seeing what those contributors are, because I'm sure that HDFC Bank will be one of those key contributors, and it is. So we have HDFC Bank, ICICI Bank as well, along with something like an Infosys and Reliance Industries. So it's essentially those large heavyweights contributing to this up move of about 200 odd points. And well, let's not forget, out of those 200 points, we have 100 points from other gainers on the Nifty 50. We don't have anything in terms of losses. Marginal losses coming in, about 6-point decline on the Nifty 50 when it comes to those contributors on the downside. So I'm not going to talk too much about that. But I do want to talk about the broader markets, because it does seem like the broader markets are a tad behind at the moment, at least on an index basis. If you consider something like the mid-cap index, that's up around 0.3%. And the small-cap index is also up around 0.4%. So only marginal underperformance, if you can call it that. Well, we, however, do have plenty of movers in the broader market. So I'm going to take a look at some of the gainers first. And among the gainers, well, we do have Honasa Consumer, which has moved up by a whopping 13% at the moment. Well, we have Kaplan Point, which is up around 9.6%. We've been talking about Kaplan Point of late. And Motilal Oswal as well, that's up around 8.5% too. And BLS International is showing a lot of gusto in terms of its volumes. And on the losing end, we have a little bit of weakness in Zydus Life. It's something that we're going to address in this show today as well. Ajanta Pharma is down 4%, and PCBL looking at about a profit taking coming through. That's down around 3.5%. But with that, let's perhaps take a look at all the stocks that we are going to consider in today's show. So Bharat Electronics, on the back of the changes in the Nifty 50. The IT sector, of course, is something that we're going to talk about, given the kind of traction that we've seen on the back of the Federal Reserve outcome. Zydus Life Sciences and KC International. And to take us through all these themes, we are in conversation with Sharmila Joshi of sharmilajoshi.com. Sharmila, good afternoon. Thank you so much for joining in. Well, before I come to you, perhaps I can introduce the first topic, and that's Zydus Life Sciences, which is under a bit of pressure on account of, well, an acquisition coming in. We have Varsha who's joining us to give us an update on this one. Varsha, over to you.
Well, thanks for that. So let's divide this into three segments. First, what is the deal? So they are acquiring 50% stake in Sterling Biotech from Perfect Day. Now, this acquisition will lead to Sterling Biotech becoming a 50-50 joint venture between Zydus Life Sciences and Perfect Day, with equal representation on the board. The newly formed JV aims to establish a manufacturing facility dedicated to producing fermented animal-free products for global markets. And the cost of acquisition that Zydus is doing is at around 550 crores. Now, given the new objective of the entity to produce animal-free protein products, the company states that a strategic view of the existing business will be undertaken. This means that they may divest a part of the existing business. Now, note that Sterling Biotech's current business includes gelatins and APIs, and their FY24 revenue stands at around 450 crore. And from FY21 to FY24, they have grown at a CAGR of around 10%. Nomura has rated neutral rating for this with target price of around 1,000, stating the same reasons as I said. Now, the other trigger that is leading to this pressure in the stock prices, their new competition impact. So Teva has launched a generic version of a product which is used to treat a certain bowel disease, and Zydus over the last years have enjoyed the benefit of practical exclusive in absence of any competition, and the product seems to have contributed around 140 to 160 million US dollars of sales in FY24. With the launch of this Teva's generic, Citi believes that the sales of the product may fall 40 to 50% from the current level. And as the competition in the product has been delayed by more than 4 years, the street seems to be unaware of the concentration risk and their impact may be seen in the valuation. So these are the two reasons we are seeing pressure on the stock.
Thank you so much for that insight, Varsha. But I'm going to take this conversation forward with Sharmila. Sharmila, welcome to the show. Is Zydus Life under your purview? If so, what's the way forward here?
I think just reacting to these two pieces of news, I think that very honestly, the acquisition they've done, I would really view it positively, because I think that the way I perceive the market and the trend towards non-animal based proteins is fairly high, and so I think that's a good move. Of course, I think it will take time for that positive to play out, but that's a growing market, that's an expanding market that you're sort of addressing. So I think the negative or the neutral view has come because of this that other piece of news, which is the competition that they will face from this new entrant in a field where they were sort of on their own. So given the valuations of Zydus, I'm actually fairly comfortable, and I think that if you were to see a further dip in the stock price, then I think that could really present you with an opportunity, because I think that a lot of the negatives of the bad news are now in the price, and the acquisition in itself is something that I view quite positively.
Okay, there you have it. That's the view coming in on Zydus Life, not necessarily a negative. That's what Sharmila is suggesting. But from there on, we move on to the IT sector. The IT sector is advancing marginally. That's up around 1.25%. But we have two key contributors in TCS and Infosys. The reason why we wanted to address it, and the reason why we want to take this up, of course, those are the key gainers besides the large cap. So Persistent is up 2.5%. We have Wipro up around 1.8%. Emphasis and Tech Mahindra as well up and about. And as I was suggesting, and LTIMindtree is also up 1.5%, despite the fact that it is going to move out of the Nifty 50. But as I was suggesting, the reason why we wanted to take this up is because the Federal Reserve is now finally indicating a higher probability of a rate cut sooner than later. And in fact, the street is now giving it a very high probability of a rate cut coming in September itself, which is still about a month and a half away when that decision takes place. But the reason why this bodes well for the Indian IT sector is the potential change in the business environment in the US. And if that actually turns for the positive, that means that it will be a good up move for the Indian IT sector. That's because it gets a majority of its revenues from abroad, and a huge chunk of their revenues come from the US itself. In fact, that ranges anywhere between 35 to as much as 60% of a lot of these companies get their revenues from the US, and which is why the economic turnaround could potentially be a factor that could play in favor of these IT companies. But Sharmila, how are you placed, notwithstanding what the Federal Reserve has said, with respect to how things have panned out for the Indian IT sector at the moment? And should we see rate cuts over the course of the next 1 year in the US? Do you think that could actually move the needle considerably for the Indian IT sector too?
Coming to IT as a sector, I think, this whole issue with the US and whether it's going to be a hard landing or soft landing, or whether they're facing recession or not, I think this whole debate started, if I'm correct, about 2 years back. And every quarter we've said, okay, maybe by the end of this quarter, we'll have some clarity on how the US is going to proceed with what their commentary is going to be, how they're going to proceed with their rate cuts, etc. And I think this Jackson Hole meeting and this commentary that came from the Fed, therefore, is to my mind extremely significant and important, because perhaps this is the first indication that we've got that they could be close to cutting interest rates. And for IT as a sector, is very positive for the obvious reasons that you sort of highlighted, that a lot of their revenue comes from the US. And I'll just add to that and say that what we've seen in the interim is really that all of them have seen some kind of a rationalization and a cut in the PEs that they traded at, about 2 years back. Because the whole COVID situation was a very was a great situation for IT as a sector because that came into prominence and people work from home, etc. You saw jobs increasing there, and then we've been in this whole period where we've actually seen job cuts, and we've seen that there could be danger from the business that they get from the US. We've heard commentary in IT companies where they said deals have been put off or put on hold or etc. So I think it's great news, and I will further add to this and say that perhaps the attention should be on a balance of, if you don't have large cap IT in your stock, definitely add some stocks, but there should be greater or some focus definitely on mid cap IT. Because if the underlying vertical that they cater to does well, then you actually see very good profits. So I think that these developments last week have been fairly significant for the sector.
Okay. All right. Well, that's the view coming in on the IT sector. The next one we want to address is Bharat Electronics. Now, this is largely on account of the changes that we're going to see on the Nifty 50 with effect from the 30th of September. We're going to have two exclusions. Those exclusions will be Divi's Laboratories as well as LTI Mindtree, and what will come in place of these two companies will be Bharat Electronics and Trent. We've done plenty of discussions around Trent, but what we have not done a discussion around is Bharat Electronics. Now, while the entire defense pack is going into a little bit of a correction / consolidation mode, remember that Bharat Electronics was one of those companies which has been the least volatile of all the defense companies. So it hasn't been advanced as sharply as some of the other companies, and it hasn't been declined as sharply as the other companies. It's one of the steadier ones. It is one of the relatively larger ones in the defense space, and a very well diversified, a relatively well-run business as per the analysts, where the management, in fact, on a regular basis, addresses not just the earnings, but also expectations on some key ratios, which is a breath of fresh air. And that perhaps has boded well with Bharat Electronics and given you, a little bit of stability in terms of shareholders, whoever's held Bharat Electronics. Sharmila, your view on BEL, I know it's gone into this zone of sorts over the past few months. It hasn't really moved as much. But from a long-term perspective, how do you rate BEL?
I think that what you said is very significant, that this is one stock which hasn't gone up as much as some of the other stocks within the PSU / defense space. And I, of course, remember seeing this stock in double digits, which honestly is not saying much because I've been in the market for that long. But, from that, this double digits is something I'm talking of like maybe 4 or 5 years ago, and that has now gone to 300, so it's become 3 times. But if you compare it with a whole host of other stocks, then the kind of rise that they've seen has been exponential. And again, the stock has delivered in terms of numbers, it has delivered in terms of orders, and which is perhaps why it is now getting included in the Nifty. So it will be sort of a representative of a lot of other, that they're trying to, sort of balance the positive sentiment that you're seeing around the sector. So it will see that influx of buying that you see in index-based from index funds, etc. So I think it's a good stock. Of course, I think in terms of valuations, it's not the most expensive, but as I said, I've seen it at double digits also. But definitely, I think getting included in the Nifty will mean that some stability comes into the stock, because you are sort of in a broader index of 50 stocks, and you will always attract that buying that comes into index funds. And this whole money that we have seen coming in from retail investors has gone into SIPs, etc. So I think that certainly indicates that the stock will stay steady at these prices.
Right, fair enough. That's the view coming in on BEL. Sharmila, on that note, thanking you for joining us and taking us through your views on the various stocks and themes that we want to talk about. Well, with that, we also slip into a short break. But on the other side, we get your conversation between Ramesh Damani and Ruchir Sharma. Stay tuned to NDTV Profit. Lots more lined up.